Today, we're diving into one of the biggest stories in finance right now: Bitcoin's record-breaking surge in October 2025. Just days ago, Bitcoin hit a new all-time high above $125,000, surpassing Amazon's market value and cementing itself as one of the world's most valuable assets. But the big question is this the beginning of a new era or the final phase of the bull run? Let's break down what's really happening behind the scenes, from ETF inflows and macro trends to risks, projections, and what October might have in store for Bitcoin investors. The historic breakout as of October 5, 2025, Bitcoin's rally has officially entered historic territory. This latest surge was sparked by massive institutional inflows into Bitcoin ETFs, marking one of the strongest adoption waves since the first US spot ETF approval in 2024. According to Reuters, institutional money has been pouring in, with hedge funds and pension funds using Bitcoin as a hedge against inflation and geopolitical risk. Meanwhile, Barron's reports that October, historically one of Bitcoin's best months, has once again lived up to the hype. But the macro backdrop is equally fascinating. The US dollar has been fluctuating, and many traders expect the Federal Reserve to start signaling interest rate cuts by year-end. That's typically a huge tailwind for risk assets, and Bitcoin is taking full advantage. On the technical side, brave new coin analysts note that Bitcoin has broken a long-term descending trend line, suggesting there's still room for upside, possibly toward $130,000 or even $150,000 if momentum continues. The drivers of the rally. So what's fueling this run beyond pure hype? Let's look at the 5 key drivers pushing Bitcoin higher right now. ETF inflows. Billions are flowing through regulated Bitcoin funds, giving institutions a safe, compliant way to gain exposure. Global uncertainty. As conflicts and trade tensions rise, investors are treating Bitcoin as a digital gold hedge. Scarcity narrative. Post-halving supply pressure in April 2024 continues to limit new Bitcoin issuance. Weaker altcoin performance. Many traders are rotating back into Bitcoin as smaller crypto projects underperform. Technological confidence. Lightning Network and Layer 2 growth make Bitcoin's utility narrative stronger than ever. Even major financial firms, from BlackRock to Fidelity, are expanding their Bitcoin-related services, helping drive this mainstream phase. The warning signs. But before you FOMO in, not everything is green candles and champagne. Several analysts are warning that Bitcoin could be nearing a cyclical top. Citigroup recently trimmed its forecast from $135,000 down to $133,000, citing stronger US dollar performance and weaker gold demand. Meanwhile, on-chain data shows a decline in long-term holder retention, meaning some whales may be quietly taking profits. And according to BN Crypto, that could signal a short-term correction phase forming in late October. If Bitcoin fails to sustain above 125K, technical models predict a pullback zone between 110K and 108K, or even a deeper correction toward $90,000, $100,000 if momentum collapses. The scenarios ahead. So where could Bitcoin go next? Let's look at 3 likely paths. Bullish scenario, continued ETF inflows, dovish Fed tone, and strong global demand push Bitcoin toward 150K plus by November. Neutral scenario, Bitcoin consolidates between 115K and 125K, with traders waiting for the next macro signal. Bearish scenario, profit-taking, whale exits, and regulatory shocks trigger a retracement toward the 90K range. But even in the bearish case, Bitcoin's fundamentals remain intact. It's still decentralized, scarce, and now deeply embedded in global finance. In other words, even corrections are part of the larger story of Bitcoin's maturation. So, is Bitcoin just getting started, or is this the top before the next correction? Only time will tell, but one thing's clear. Bitcoin is no longer a fringe asset. It's a pillar of modern finance. If you're watching this, remember, don't chase hype blindly. Study, plan, and understand the risks. If you found this analysis helpful, hit that like button, subscribe, and share your thoughts below. Are you buying, holding, or waiting for a dip? This is Next Vault, bringing you data-driven investing stories every week. Thanks for watching, and see you in the next one.